Welcome to this week's news recap. Let's begin. Trump pardons former Binance CEO Changpeng Zhao. President Donald Trump has granted a full pardon to Changpeng Zhao, the founder and former CEO of Binance. The pardon follows months of lobbying efforts and continues a major policy shift toward digital assets under the Trump administration. White House Press Secretary Caroline Leavitt said Trump exercised his constitutional authority to end what she called the Biden administration's, quote, war on cryptocurrency. She added, quote, the Biden administration's war on crypto is over. Zhao, who served 4 months in prison after pleading guilty in 2023 to anti-money laundering violations, thanked Trump on X, writing that he would, quote, help make America the capital of crypto. The decision could clear the path for Binance's return to the U.S. market, though regulatory monitorships remain in place. Polymarket targets $15 billion valuation as prediction market. Boom heats up. Prediction market leaders Polymarket and Kalshi are seeing investor enthusiasm soar as both startups race to dominate a fast-emerging financial frontier where gambling meets traditional markets. According to Bloomberg, Polymarket is in early talks to raise funds at a valuation between $12 billion and $15 billion, a tenfold jump since June, when Peter Thiel's Founders Fund led a $200 million round valuing the firm at $1 billion. Earlier this month, the Intercontinental Exchange, ICE, parent company of the New York Stock Exchange, said it would invest up to $2 billion in Polymarket at an $8 billion valuation, a move that made CEO Shane Copland the youngest self-made billionaire. Meanwhile, Kalshi is fielding offers valuing it at over $10 billion, just weeks after securing $300 million in a round co-led by Andreessen Horowitz and Sequoia Capital. Both platforms have seen record activity, with combined weekly trading volumes exceeding $2 billion in mid-October, surpassing their previous peak during last year's U.S. presidential election. The two competitors also struck major commercial deals this week, with Polymarket becoming a clearinghouse for DraftKings and securing a multi-year partnership with the National Hockey League, which also signed a similar agreement with Kalshi, marking the first major U.S. sports league to collaborate with prediction markets. Despite the momentum, regulatory challenges loom. The Commodity Futures Trading Commission, CFTC, has allowed limited expansion of Kalshi's markets, but state gaming regulators have pushed back in court, raising unresolved questions about market manipulation and insider trading. Crypto CEOs meet U.S. senators to revive stalled market structure bill. Top crypto executives, including Coinbase CEO Brian Armstrong, Chainlink's Sergey Nazarov, Kraken co-CEO David Ripley, and Uniswap founder Hayden Adams, met with U.S. senators from both parties on Wednesday to push forward long-delayed crypto market structure legislation. The group first met with Senate Democrats, led by Senator Kirsten Gillibrand, to discuss how to reconcile policy gaps on issues such as decentralized finance and illicit finance. Nazarov said more than 10 Democratic lawmakers attended and that there was, quote, sufficient support to keep the bipartisan bill alive. The meeting was briefly joined by Senate Majority Leader Chuck Schumer. A second meeting with Republican lawmakers, including Senate Banking Chair Tim Scott, reaffirmed GOP backing for the bill, which aims to define how digital assets are classified and regulated. Scott's office urged Democrats to, quote, return to the negotiating table, end quote, to finalize language ahead of markup. Armstrong later posted that the industry is, quote, keeping the pressure on in D.C., end quote, to advance the legislation to President Trump's desk. Lawsuit alleges Meteora founder orchestrated Libra and MELANIA meme coin scams. A newly amended class action lawsuit accuses Benjamin Chow, co-founder of Solana-based dApp Meteora, of engineering a network of fraudulent meme coin launches, including the high-profile Libra and MELANIA tokens promoted by Argentine President Javier Milei and First Lady Melania Trump. The case, Herlock vs. Kelsier Ventures, claims Chow led a team that created at least 15 tokens through a coordinated scheme involving Kelsier Ventures, headed by Hayden Davis, and Meteora collaborator Eungmin Yao. According to the complaint, the group, quote, borrowed credibility, end quote, from public figures to legitimize what plaintiffs call a, quote, coordinated liquidity trap. The filing emphasizes that Milei and Trump were not responsible for the alleged fraud, serving only as, quote, window dressing, end quote, for Chow's operation. Both the Libra and MELANIA coins surged before collapsing shortly after launch, wiping out millions in investor funds. Chow resigned from Meteora in February, denying on X that he or the firm profited from the projects. Coincidentally, Meteora had its token generation event on Thursday, launching at a $650 million fully diluted valuation. Aave DAO considers $50 million annual token buyback program. The decentralized lending protocol, Aave, is considering a major new initiative to make its token buybacks a permanent fixture of its economic model. The proposal, introduced by the Aave-chan Initiative, ACI, a governance group led by Mark Zeller, seeks to allocate $50 million annually from Aave's protocol revenue toward repurchasing its native Aave tokens. According to the plan, the Aave Finance Committee, AFC, and Token Logic would jointly execute weekly buybacks ranging from $250,000 to $1.75 million, with flexibility to adjust based on liquidity, market conditions, and available revenue. The initiative builds on Aave's previous buyback program, which the ACI described as a, quote, strong success, and aims to reinforce the protocol's long-term framework known as Aavenomics. With approximately $169 million in annual revenue, Aave is among DeFi's most profitable projects. The protocol recently surpassed $25 billion in outstanding loans, expanded into real-world asset lending via its Horizon platform, and launched its first non-EVM deployment on Aptos. Aave currently ranks second among DeFi protocols in monthly fee generation, according to data from The Block. Coinbase acquires Echo, an up-only NFT, in $375 million deal. Coinbase has announced a $375 million cash and stock acquisition of Echo, a crypto fundraising platform founded by trader Jordan Cobie Fish, along with Cobie's up-only NFT, signaling the exchange's expansion into on-chain capital markets and crypto media. Echo's platform enables both private and public token sales through its Sonar product and has facilitated over $200 million in funding for crypto startups since its 2023 launch. Coinbase said the acquisition will make capital raising more transparent and accessible, with plans to extend support to tokenized securities and real-world assets in the future. As part of the transaction, Coinbase paid $25 million in USDC for the up-only NFT, which contractually requires Cobie and co-host Brian Ledger Krogsgaard to produce 8 new episodes of their talk show. CEO Brian Armstrong confirmed the purchase on X, writing, quote, "Just burnt the NFT, your move." Ethereum insiders criticize foundation. Overpay, leadership, and favoritism. A wave of public criticism has yet again erupted against the Ethereum Foundation, EF, after former Geth lead developer Peter Szilagyi released a year-old letter accusing the organization of poor compensation, favoritism, and over-reliance on founder Vitalik Buterin's influence. Szilagyi revealed he earned roughly $625,000 over 6 years, saying that the foundation's pay structure pushed key developers to seek income elsewhere. Quote, "Ethereum's direction always boiled down to your relationship with Vitalik," he wrote, claiming that most major projects are steered by a small group of insiders backed by a handful of venture firms. His comments sparked widespread debate across the Ethereum community. Polygon CEO Sandeep Nailwal said the letter made him, quote, "start questioning his loyalty to Ethereum," citing a lack of support from the foundation. China halts tech giants' stablecoin ambitions amid regulatory pushback. Major Chinese technology firms have suspended their stablecoin initiatives in Hong Kong after receiving guidance from Beijing regulators. According to the Financial Times, officials from the People's Bank of China and the Cyberspace Administration of China instructed companies, including Ant Group and JD.com, to halt participation in Hong Kong's pilot program for digital currencies. The decision reflects growing unease in Beijing over privately issued currencies, which some officials view as competing with China's digital yuan, ECNY project. Quote, "The real regulatory concern is who has the ultimate right of coinage, the central bank or private companies," one source told the paper. The Hong Kong Monetary Authority had opened stablecoin licensing earlier this year, positioning the city as a testing ground for tokenized finance. However, former PBOC Governor Zhou Xiaochuan warned in August that stablecoins could fuel speculation and financial instability, prompting regulators to take a more cautious approach. MegaETH confirms MiCA-compliant token sale and reveals novel sequencer design. Ethereum scaling platform MegaETH has confirmed the authenticity of a leaked MiCA format whitepaper, revealing plans for a regulated public sale of its Mega token and outlining new technical features. The sale, starting October 27th on Coinbase-owned Sonar, will auction 5% of total supply, about 500 million tokens, through a 3-day English auction that begins at a $1 million valuation and caps near $999 million. According to founding contributor Namik Muduroglu, the project chose this model to attract, quote, participants who show conviction, end quote, rather than rely on airdrops. The MiCA approval allows EU investors to participate, but requires KYC verification and licensed custody via OKCoin Europe. MegaETH's whitepaper also introduces a rotating sequencer system and proximity markets, which link token staking to network access for low-latency trading. The document allocates 9.5% of tokens to the team, 14.7% to investors, and more than half towards staking rewards aimed at building long-term on-chain activity. Last Friday, MegaETH repurchased 4.75% of its equity and token warrants from early backers who were exiting before its token launch, signaling confidence ahead of its upcoming mainnet debut. Unchained is produced by Laura Shin, with help from Juan Aranovich, Margaret Curia, and Pam Majumdar. The weekly recap was written by Juan Aranovich and edited by Stephen Ehrlich. Thanks for listening.